But now, how to determine your risk versus return expectations when you're investing by yourself. And so it's not exactly an easy exercise because you don't have like the fancy forms and the systems behind it. But then generally, different investments are already pre-classified in terms of how much risk they actually carry, whether it's a low risk or a high risk investment. But then for yourself, you need to think about your risk tolerance and how much risk that you can actually take. Because at specific points in time, depending on the situation, your goals, and how much you're investing, something that is a high risk investment for me may not be a high risk investment for you because you're in a very different position. And so it all boils down to sort of answering a few key questions for yourself. So for example, let's say you want to dedicate £500 to an investment idea. What you essentially need to think about is, firstly, how much does that represent of your total wealth? And you want to work this out in percentage terms. So you want to get a piece of paper, write down all of your assets, all of your liabilities, get an understanding of your total wealth, right? Assets minus liabilities is going to give you your net worth number, right? And your net worth is basically your total wealth. Then look at that £500 that you want to invest, how much that represents of your total wealth, and that will give you a good idea of how much risk you can actually take. If it represents half of your wealth, you probably want to take less risk, right? Or if it represents like 1% of your wealth, then you might decide to place that in a higher risk investment. And then the next question to ask yourself is, can you survive if you lose it all? So if you invest this £500 and tomorrow morning you wake up and it's all gone, never to be seen again, can you survive? And I mean, it's never nice to lose money, but the way you want to think about this is in terms of how much will that loss influence your everyday life? How much is that going to affect your ability to continue with your current lifestyle? And is it going to be the end of the world for you or not? Because in reality, and you might feel like it's not a big deal because it wasn't a lot and you can actually afford to lose that much. So that again will determine how risky you can go with that amount of money. If it represents a significant percentage of your total wealth, then naturally your lifestyle is going to be influenced by that loss. And the third question, how much are you willing to gain for what you're willing to lose? The ability to answer this question, I think, is one that comes with time as you go through your journey of learning how to invest and what it means to lose and to make money. Because what I've noticed time and time again is that people assume that they're a risky investor and that they're willing to take on a lot of risk because they want high returns, right? But when you start talking to them more and more about risk and losing money, they're not comfortable with the potential for loss. And well, then that means that you can't go for things that offer a high return because they carry a high risk. I think practice will sort of help you determine how you look at your level of risk. Once you start investing more and more and going through the emotions of losing and making money, you're going to better understand how you feel about it. Because unfortunately, it's impossible to remove the sort of human element and the irrational, emotional part of the investments. And that's why when you're building your portfolio and you're investing, you want to set very clearly defined limits that you want to work within. It's important to have a structured approach to investing rather than just jumping into different investments because somebody says this or somebody says that, or because you read it in the news, or because it's a trendy idea at the moment.